Good morning and welcome to the market forecast for Friday, September the 4th. Yes, it is Friday. Labor Day weekend this weekend. Don't forget, limited trading hours on Monday. My name's John Hoagland. Thanks for trusting me with your time. As always, we're going to look for opportunities in context through the lens of risk management. It's my goal today to make some money early and perhaps start the long weekend a little bit early. That's my hope for all of you. Our accounts intact, a little extra money in them for the weekend, and then we start the weekend early. Hopefully, if you're already in the markets, you're headed the right way. Markets are moving a little bit. We did have some important information this morning in the form of the unemployment numbers. 7:30 Central, the unemployment numbers came out. Non-farm payrolls. They were looking for an additional 1.4 million. It came out 1.37 million additional new jobs in non-farm. Although the unemployment rate was expected to be at 9.8, it came out at 8.4%. That's good news, although there is some question as to how they came to that, because non-farm payrolls, just taking a look here, that was a miss. Also, private non-farm payrolls was a bit of a miss as far as the number of additional jobs added. Although they do say that the unemployment rate is 8.4% after expecting 9.8, and last month's was 10.2%. So, at the very least, we've got that information looking like unemployment is decreasing. Again, not quite sure how they come up with those unemployment numbers. According to non-farm payrolls and private non-farm payrolls, we had a little bit of a miss. So there's some contrary information in those numbers. It's always going to be fascinating, always is fascinating to see how markets digest that information as the day goes on. And again, we're going to take a look and see if we can find some decent levels or areas of interest for us to take some executions today. As far as news is concerned, hey, thank goodness there's an agreement has been made to keep the U.S. government open into October. Negotiations on stimulus measures are to resume next week. Tech stocks remain under pressure while the broader market has been digesting yesterday's emotional sell-off. We'll see how the information that came out this morning affects those markets as the day goes on. Crude prices have recovered off yesterday's lows as oversupply fears have kind of faded a little bit. All eyes are on the rig count this afternoon as for what we might be expecting as far as supply and demand for crude oil next week. All of that fundamental information doesn't mean anything if we're not trading what we see. Make sure you look for those asymmetric opportunities, little risk, big rewards in anything that you're doing. Make sure you like, share, comment, question, feedback, and heckling are always welcome. And as usual, go ahead and subscribe to our YouTube channel. We're getting lots of good content, and you'll be notification when we do go live. I want to say good morning to everyone. Charles March, first one in the room. You win the prize this morning. Yes, happy Friday. Nick Moe, Greg, MSS Capital, Marco, good morning. Tanya talking about shorting the NASDAQ yesterday around 12,200, but jumped out on a little pullback thinking it wasn't likely to tank like it did. Going to work on trusting my entries and stops still, obviously. Yeah, one of the things I hear most from people as a performance coach and as a trader is, I keep moving my stop to break even, or stop my to break even plus one, or think, in managing trades, people tend to keep their stops a little bit too close, especially in potential range days, potential directional days, and it's always a challenge. I get it. You want to take your risk off of them on the trade as soon as you can. You want to have that kind of free feeling, like, okay, it's going my way. I'm going to take the risk off. But so often, markets come back and recheck those levels that we have found that could be good levels, and until they're proven wrong, you really want to try and stay in them. So yeah, keep that patience and keep trusting those entries, Tanya. It sounds like you're doing really well with finding those good entries. Now it's time to learn to trust them. I think a lot of traders experience the same thing. Who are we we're just a little trader. How do we know that we're doing the right thing at the right time? We don't until it's either proven right or proven wrong. Give yourself that chance, Tanya, and to all of you. Anthony, good morning. John, Ute, Alan, Ralphie Martinez, something smells fishy. Yes, I was thinking the same thing a little bit there, Ralphie. But it doesn't really matter. It's what the traders digest. It is what seems to make sense visually. So make sure you trade what you see. No matter what you think of those numbers, the market is always going to find the equilibrium. The market's always going to find where two-sided trade can occur. So keep your eyes and ears open. Make sure you trade what you see. Yes, wondering about the numbers also. Someone forgot to carry the one, yes, on those numbers. You may be right, Dag, and time will tell. Will this hurt the stimulus package? Well, there's still some major differences as far as the Republicans and the Democrats as far as what they want to do with the stimulus. The Democrats are looking for 2.2 trillion, and the Republicans are looking for far less than that. Let's just hope they come to some sort of an agreement that's going to help the American people. Vast West, good morning. Good morning, everyone. Rocker, good morning. Yes. Christopher Lee, good morning. Greg, fighting the same battle, Tanya. Short the ES. The 30-minute bar yesterday hopped out a little too soon. Good morning, Anthony. Well, get him today, Greg. Absolutely, Tanya. That's the way to think. So I've been having a little gremlin issue here this morning with the charts. I'm going to bring them back up. And again, I may have to reopen them a couple of times while we look at them. And I just can't find where that gremlin is. And what I will find him, I have a particular set of skills. I will find the gremlin. All right, so let's take a look into the crude oil market on the daily chart here. Okay, so we have some pretty good volume the last couple of days on these down moves. We've broken out below weekly kickoff low, 42 even, which is an area that I look for longer time frame traders to need to want to or choose to adjust their inventories. So the volume was pretty good the last couple of days. We lost 13,000 in open interest, and it seems as though that dip to the downside may have caused a few recent shorts to cover. I'm going with a short covering rally yesterday, and that's I believe the decrease in open interest that we've found. We're still respecting $42 as a resistance level in the overnight. We're just opening up. Let's take a look and see what we've done here in the first thing in the morning. So no gap, no real overnight inventory, no real reason to feel as though I need to be pressured into putting a trade on early today. Here's the value area from yesterday. We did not open with a gap. Settlement is here, 41.37, relatively close to where we kind of opened the session. It does look like our opening range may be the high of the session, at least for now. But because we've opened in range and value, that says to me, all right, I can probably stay patient. I'm going to be looking for better trade locations as the day goes on. We found some support down here around 40.20, 40.30, 40.40 yesterday. That could be an interesting opportunity. Our overnight low and overnight high are always interesting when we do open in range and in value. Try and stay patient. And just let the market come to you. It may even take that first hour to express a basic range for the day, and then I'll focus on the extremes of that first hour of trade, also known as the initial balance. So stay patient. I'm thinking that there may be better trade locations in crude oil as the day goes on. One of the things I do kind of want to mention, and that is, we've broken out and we're holding below an important inflection level. Longer time frame traders can enter the market at any time. I haven't necessarily seen them at this level just yet, but the longer we stay here, the more likely it is that they're going to need to or want to adjust inventory. And being Friday, that's a possibility in all of these markets. Take a look at the E-mini S&P now. Volume is always tremendous on down days. That's just a function of the equities markets, the equity index markets, I should say. Good volume below that weekly kickoff, the breakout of that weekly kickoff high here. Um, we had one close above it. We found sellers. We took out pretty much six straight upward emotional thin days. It looks like we've brought in all of the laggard buyers that did get their accounts whacked a little bit yesterday. Boy, that range that we put in yesterday, we could have all had a really good month yesterday, and I hope that some of us were able to take part in at least a part of that big move to the downside. But for today, we're opening or at least holding here where we're kind of just hanging in some digestion from yesterday. The market did trade pretty much and has been respecting this 200 session or this 20 session, I should say, exponential moving average, and the charts are down. Let me get those back up for us really quickly. I don't know why I can't get rid of this gremlin, but we're going to get through this, I promise. So should be back up here. Yes, we are back. Now let's take a look at the 30-minute chart. So here's our route from yesterday. Here's 35.55 was weekly kickoff high, one close above it. Soon as we got back below it yesterday, the race was on to the downside. Settlement for today is 34.6150. That's yesterday's settlement, I should say. If I knew today's settlement, boy, we'd all have a really good day, wouldn't we? All of our overnight trade was inside the value area that established in the back half. Let's call it the last 2/3 of the day yesterday. We started to form some balance. We've got a point of control right here. We've got settlement very close to that range respectively. Okay. So what did we do as far as open interest is concerned? We lost 15,000 in open interest. A lot of our late laggards, new longs, I think, liquidated yesterday. We've got basically a B-shaped profile, which does indicate long liquidation. With that drop in open interest, I'd say we kind of cleared out a few of our laggard buyers, the ones that were going to miss the next move to the upside. We finally, I think, got everybody a little bit too long, and we needed this pullback. Don't forget, if there's no bad news, this pullback may just end up being just that. Might just be an inventory adjustment, an emotional inventory adjustment, and without bad news, this market could just continue to grind to the upside. We don't have any inventory. We're not going to be opening with a gap. We're in the middle of yesterday's value area that tells me, okay, again, I need to be a little bit patient, look for better trade locations. I'm not seeing any huge knee-jerk reactions to the unemployment. I think there's a lot of traders shaking their heads, just like Ralphie and me and all of you, as to what those numbers mean. The contrary information coming from them is going to take some time to digest. One of the things that I'm going to be looking for is the top of this gap might end up providing some support for us if we get to that level. Okay, this little gap right here, the top of this gap is 24.0950. Traded to kind of close to it yesterday. If we get the opportunity today, that might be an interesting spot for an execution. But outside of that, we've got our overnight low at the value low from yesterday. We've got our overnight high, not quite at value high from yesterday. Again, stay patient. There may not be a great opportunity for us today. And if we don't see one, if I don't see one by noon, I'm going to hang it up. I'm going to hang it up and see what happens next week. We don't know what's going to happen. Of course, anything can happen on the open. Here's the NASDAQ. The NASDAQ has been respecting that trend line, at least initially here. A little bit of a look below it in the overnight. We've got also a little bit of respect being given to our weekly kickoff low, which is 11,630. Excuse me. So it looks like we're going to open still maintaining price above this trend line and this important inflection level. Tech stocks continue to be presenting weak volume and open interest yesterday. Again, long liquidation. We lost 3,800 in open interest on higher volume on a down day. Again, we're up against a possible market state change event here. If we accept and accelerate below weekly kickoff low as well as this trend line, that may send this market, and there go the charts again. Let me get those back up. I do apologize. I've got to figure this out. As I said, I've got a particular set of skills. I will find that gremlin. And here we are back again. Okay, so just talking about the respect that the market or price has been giving this trend line as well as that important inflection level. What does it look like in this short time frame chart here? Okay, settlement up here, 11,850. Put that on your charts. Market kind of looking below here. Again, respecting that weekly kickoff low in large part last night. Back in range, back in value, back to patience. Our overnight high settlement. Our overnight high point of control. Our overnight low, weekly kickoff low. This is a pretty tight level and maybe providing some opportunities for us as the day progresses again, but I'm going to be very picky in my trade locations today. We had a volatile, emotional move to the downside yesterday. Opening in range, I think, does give us that opportunity, just like in crude, just like in the S&Ps, just like in the NASDAQ, of letting that first hour of trade play out and finding opportunities, perhaps at those extremes. We don't know what's going to happen. Watch the opening range. If the opening range is one extreme or the other in the NASDAQ, that might provide some insight as to buyer or seller control early in the session today. Might be something I would look at. But overall, I'm going to be looking at value at weekly kickoff low here and our overnight low, and then settlement and point of control and our overnight high. Target rich environments right there. So try and stay patient. Look for the market to respond quite possibly at those levels. Gold. Okay, volume was okay yesterday. We added 4,200 in open interest on this move that respected this lower trend line. It has not yet been really truly respected today in regular trading hours. As a matter of fact, our weekly kickoff low has been respected by a little bit more than that. Now, there was a pretty decent knee-jerk reaction in gold on the numbers this morning. Let's take a look now at just one more point about the daily chart is we have not broken structure. We're still in a medium time frame area of balance and largely in short time frame control. So here's the knee jerk here. Okay, this was the 8 o'clock bar. This was a move back down towards weekly kickoff low that so far is showing signs of rejection. The knee jerk was to the upside and on the unemployment numbers here. We just got a nice little volatile move here. We're kind of working on establishing a pretty wide initial balance. And the wider the initial balance, the less likely it is to be extended by much. The wider the initial balance, the more energy it's going to take for the market to extend outside of it. So we've got an initial balance that looks like it's already bigger than yesterday's entire day session range. I'm going to be focusing on the extremes. Our high here, our weekly kickoff low here for the opportunities as we continue to establish this initial balance. It's going to be presenting some decent extremes, which gives us the opportunity to look for cheap trades. If we're fading the extremes, it's not going to cost us much to find out if we may or may not be right or wrong on those trades. So again, I'm staying patient. We're inside value and range from yesterday on almost all of these markets. Here's the euro, also in range and largely in value from yesterday, saying, hey, you know what, let's just chill, let's look for opportunities as the day goes on. Uh, Respecting this lower trend line yesterday, open interest, we lost about 2,900, and I'm going to go with, because we've been so range bound on a kind of an upward range, I'm going with, we probably had some shorts in this market that covered off the lows yesterday. That I think is our loss in open interest. The channel is being respected. We're still in short time frame control. And a pretty decent knee jerk here on the unemployment numbers. We had a pretty decent boost in the dollar index on that. The dollar index was up a little bit. Last time I checked was 92.87. We can take another look at that, and I've lost my charts again. And here we go. All right, we are back. So here's the euro. Really no overnight inventory. Basically testing the low of yesterday's range, our recent low here. Pretty decent move to the downside. The dollar got a pretty decent spike off of the unemployment numbers. Looks like it's continuing to hold higher here, 30.9307 last I checked. So that would give a little bit of pressure to our euro. So our lows from yesterday, our overnight lows from yesterday, our current low here, also interesting. Kind of extending below yesterday's range. If we accept down below yesterday's range, our next test would be this swing low. Again, I'm going to try and stay patient in the euro here. Looks like we are heading possibly for another test of yesterday's low, or this trend line. That might be one of our better opportunities today to be able to limit risk. You notice every time I think about an execution, the first thing that comes out of my mouth is, what is my risk? What is my risk? If the risk is too great, I can try and get in to the trade closer to the point of invalidation, or I can just wait for the next opportunity. This is now the Japanese yen. While we've got our charts up here, let's take a quick look at them. Low volume, still just really short time frame controlled. No open interest change at all yesterday. It's as though nobody cares. That frightens me. I want a market that a lot of people are looking at. So, take a look at the 30 here, and then we'll just get ready for our trading day if we're not already in. Again, the nice spike in the dollar has our currencies heading towards yesterday's overnight lows. This was our opening range low yesterday here. Very interesting opportunity for us in this kind of a target-rich environment. Already kind of getting a little bounce off of this area. Again, I'm going to stay patient. I want to make sure that when the market's open, kind of in value, in range, close to value, I'm going to tend to wait for that initial balance, that first hour of range to establish itself before really looking for decent opportunities. Yesterday was a very emotional day in the equities. That emotion, may or may not continue. It is a Friday. It is a Friday before an extended weekend. Anything can happen, but we also are well aware that traders and investors, more traders, I would say, investors are in it for the long haul, but traders have a very short memory. They have short attention spans. So it's going to be an interesting day. And they always are. I probably say that word too much. Hello, Fanis. Hello, Esteban. Hello, Bryce. Thomas Jefferson once said that a woman who can produce a baby every 2 years is worth more than any man's wealth. Absolutely. Tanya, I'm going to just leave that. Yes, okay, me too. Michael Voy, yes, if you find it, send it to the AMC Museum. The gremlin? Yes. Well, I found him. Here he is. And he's a wily little guy. I don't know why he keeps messing with my computer, but I told you I had a particular set of skills. I will find him. I found him. All right. On that note, let's take our deep breath. Lots of folks probably taking the day off. Lots of folks already on their way to wherever they're going for the Labor Day weekend. Keep that in mind. Might be a little bit thin. Markets might be a little bit less liquid today. It seems as though volumes might be down a little bit here. So take your time. Make a little bit of money. I authorize you. Make a little bit of money this morning. Take the rest of the day off. Enjoy the Labor Day weekend. I know it's difficult in the current environment with the coronavirus and all of that, but get yourself outside. Have some time. Have some good times with friends and family. Respect social distancing. Wash your hands. Stay cool. Stay happy. Get out there and profit today. No recap today because it is the last Friday without the recap. We should probably be doing the recap on Fridays again after Labor Day here. Looking forward to seeing you all back here on Monday. I'm looking forward to hearing your positive results from today. Stay in your process. Don't chase the money. All of those cliches do mean something. Pay attention to them. Have a great weekend. Love to all of you. Be good to each other. Be good to yourselves, and trade well. We'll see you on Monday. Not Monday. Tuesday. No forecast or recap on Monday. Labor Day. Take the day off. Again, I authorize you. Trade well today. We'll see you on Tuesday.